Amrita, what are your thoughts of crude and Brent at 22, 23 handles per barrel? Amrita, can you hear me?
Yeah, I can hear you just fine.
Go ahead.
Yeah, there's good reason for us to be here given the complete collapse in demand that we are seeing. We expect oil demand globally to fall by anywhere between 7 and 8 million barrels per day year on year in April. We think there's more downside to prices over here, and we really think Brent could test $15 or $10.
How do we get to $10? Is it a supply shock or a demand issue?
Well, I think the only way you get to those numbers is really a demand shock. But, of course, it doesn't help that we have Saudi Arabia and Russia locked in a price war, and they are ramping up production to maximum levels at a time when demand has cratered. So this is an unprecedented event because you've got both rising supplies and collapsing demand.
At what point do Saudi and Russia come back to the table? Is it when we get to 20 a barrel, $10 a barrel? What price point is painful enough that they're willing to talk?
I think the critical thing for both of them is that they believe they can outlast this longer than other producers. Russia, we believe, can probably outlast this for longer than Saudi Arabia, but Saudi Arabia is digging deep. They announced some significant austerity measures yesterday. So the whole point is that they are hoping the high-cost producers are going to blink, and that's when you get in U.S. shale, Canadian producers, other Latin American producers. We are expecting significant shutdowns in non-OPEC supply around the world.
But Amrita, good morning from London. Is this shutdowns that then can be put back on at a moment's notice, or are we going to see some of these shale producers actually go bust?
I think that's the most important question, and I think this is the biggest difference between now and 2016, or even 14 for that matter. Back then, shale was ramping up. Today, shale has been coming off, and particularly, let's say, in December, it had started to come off even prior to the price fall because private equity money is pulling out. There's just not appetite to invest in shale companies because they haven't made money. This time around, once we do see the bankruptcies, we don't expect shale production to come back to the same extent simply because nobody's going to buy those assets.
Do you know, Amrita, if Saudi Arabia is actually targeting a price? Or do they want it to drop to $10, or are they targeting 15?
No, they're not targeting a particular price. I would say that, they're definitely preparing for prices in the 20s. Again, the austerity measures announced yesterday definitely point to that. But I do think at these price levels, or to be honest, at any price level that gets the high-cost marginal producer out, that's really the target right now, given that there's clearly no progress between Saudi Arabia and Russia made in coming back to the table.
If this is a fight to gain market share, does whoever win it then hold on to that market share when the economy picks up again?
And that's, of course, the idea, right, that even if you endure pain for, this is going to make them have low oil prices for over a year, if not a year and a half, given the amount of inventories we're building right now. But the hope is that after that, the long term, it's really the low-cost producers, whether it be OPEC, Russia, they're the ones who thrive. And effectively, they will end up exporting higher volumes at a higher price. The gap or the hole we're going to create in non-OPEC supplies right now, given the downturn, we could be down close to 2 million barrels per day year on year in non-OPEC supplies next year, and even more in 2022. And that gap has to be filled by OPEC and Russia.